anybody who wants to know more about Ronch and his background, if you're new to Sang Lucci and you don't know much about Ronch, go to our YouTube channel. There's tons of interviews with him, content with him, where we talk more about kind of his origin story, all the battles that he fought coming up, learning the ropes in trading and really figuring out a methodology that worked for him. There's tons of stuff out there, so I'm not going to go through Ronch's whole bio. But what I will say is, Ronch has been an incredible asset to us, to the master course, to the way that we teach the course, in part because the overlap in the Venn diagram of how Ronch sees a lot of things very similarly to Lucci. He learned, tape reading from Lucci, learned a lot of, how he applies options, integrated a lot of Lucci's perspective. But you guys are also very, very different in a lot of fundamental ways. You approach risk in different ways. You approach the ways, you manage your positions in very different ways. And Ronch is a really good example of how you can, take what somebody else is doing, what somebody else taught you, apply it in a way that works for you, and it looks, completely different, even though you're kind of using the same skill set. So that's one of the things that I want to get into today, Ronch, is your perspective, your experience of, last year and how things went, adjustments that you made, and really what that's going to look like, what you kind of feel like this year is going to look like for you as a result of, what happened last year. So let's start with that. How would you characterize last year from a trading perspective? What was it like for you?
Well, from a trading perspective, so to kind of put things into focus, I have everything to me it comes back to time frame and what kind of a trader are you? So if you already know what kind of a trader you are, half of the battle is already won. For me, I am, because of where I'm at this particular stage in my life, I have very different time frames for different accounts and for different purposes, right? So in the steam room, what you're seeing most of my focus going to, at least from a perspective of how am I going to grow an account, for example, like we're doing a small account challenge, right? So this year, last year I started it. We started with 20K, got up to 50, ran into some problems, and the balance came ripping back down to 27, 28K, right? So I'm kind of treading water right now, trying to get it back over 30. And the idea is we're going to try and run that account. I'm going to try and run that account back up into a mid six figure or better account. It's been a long time since I've had to work a small account to a larger account. So that's one aspect. And it comes with one set of viewpoints, assumptions, things that I think may or may not happen. Then there's the swing trading, right? And that also carries, it's a different account. It comes with a different set of rules, assumptions, things I'm looking for. And that kind of balances what my mental approach is there. Then there's, long-term. And long-term is not just, is not typically for me is not just trades. It's more about, okay, am I in the right mix of things from a long-term perspective? And I don't want to tweak anything there, right? I want subtle turns of the dial in longer term things. Like, for example, if I'm in a stock, an individual name, how has it performed over X number of years? And I don't necessarily need to trade that. I need to just let it sit and work. Other things in the big picture are like, how is the real estate that I hold performing? How are some of the private placements that I hold performing? So it's one big giant picture. What I can tell you is the area that I'm trying to focus on a lot right now, which is the shorter term trading, is quite unique and quite difficult, because everybody that comes into the marketplace listening to people like me or Lucci, the majority of those people don't have large account balances to work with. And it is much easier to work with a larger account balance than it is to work with a small account balance. So when you have a small account balance, your approach And the things that happen can be very mentally draining because you have to make decisions and time frame decisions and size decisions all of the time. So it's a very mentally taxing type of trading, whereas longer term does not require the same level of decision making. So in short term trading, it's mostly focused on a combination of things: technicals, tape. What option am I going to take? How long do I want to be in this thing? Do I have a target area that I'm looking at for exit? And when I do that, how much of the P&L have I, used to get there? And did I take too much risk for that trade? Did I get the kind of profit that I thought I was going to get out of it? Am I making progress? It's like it really is a more intense whole nother level of things. And you saw what happened to me at the end of the year. I think it was November. I got trapped in a position, and it was in front of a Fed announcement. And I got the move right. And what happened? The platforms locked up. The trading platforms wouldn't let me exit. It's not like they shut down, but they were overloaded for whatever reason, right? Because all of these, let's face it, the retail platforms, on heavy days like that, when news gets released, that's big news, and all of a sudden all of the major institutions are in there trading, those guys are going to get priority. Retail traders, there are going to be times where you just get screwed. It's like being in the ocean, and that the third wave in the set you're not entirely ready for, and you just get freaking barreled, right? And you get plowed into the bottom, and you get held down, and you think your life is over, right? So that's a very similar feeling when you can't get out of a position with size, and you watch an account that you built to 50 grand get, freaking cut in half. That's a really helpless feeling. So in those circumstances, you stop, you back up, you start to rebuild, and you start to look for, where can I stick and move? So, that type of emotion that individuals go through on the smaller side is kind of what I'm battling right now. The direction is up, the direction is positive, it's over 30K, but like on a day like today where you make a couple of wrong moves, all of a sudden you're like, shit, like now I gotta try and scrape back to get where I was before. That requires a ton of effort. It requires a ton of mental capital to be expelled for doing something very simple, which is clicking a mouse, right?
Right. Yeah. I mean, I want to go deeper into how you feel yourself adjusting what you're doing in real time to react to the mental strain of trading a smaller account. Like, are you changing anything in terms of your habits, your behaviors in the market, outside of the market, just to manage the strain so it doesn't wear you down?
One of the things that really obviously helps me, and it's not, clearly it's not fair, but one of the things that I do is I get to come to a place like this on a more frequent or regular basis. And this environment allows me to calm the fuck down, right? Like I eat better here. I exercise more regularly here. I sleep better here. Even though I'm waking up early, I take naps in the afternoon, and then I get up, and I'm either playing tennis every day, I'm golfing every day. I get to get in the water every day. Like, you know what I mean? So those things really help me recharge and reset. And like I said, it's not fair. Not everybody can just hop on a plane and go to Hawaii and make that happen. So I am just at that stage in my life where I can. So, that really, 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 really helps. So those are the things that I do to help me reset. And like on a day like this morning, I mean, I literally should have just stayed in bed this morning. I woke up and none of my shit was working. Like I logged out of my laptop, and I rebooted everything, and I asked the stupid thing to reboot all of the tabs that I had left open. And I don't know why, but it gives me some kind of different profile that it wants me to log into. And when I do, it resets everything. So I have to relaunch all of the tabs, right? Like it's a huge pain. And then also this morning, and I'm not blaming the guys in the room, but they changed how some of the formulas that they use that we plug into TradingView on a daily basis to spit out the GEX numbers, right?
Right.
Where are we looking for stocks price wise where they could meet support and or resistance? It changed. They added Thinkorswim in addition to TradingView, and they blended them together. I was used to just TradingView, so I was sitting there trying to separate TradingView versus TOS, and I'm kind of ADHD. So if you put TOS and TradingView and you label them that way and you put them next to each other, I'm going to fuck it up because at 4 a.m, all I'm going to see is T. Like I'm just looking for quick notes, right? There's T, right? And the next thing you know, I've got a giant fucking spider's web on my desktop. The market's rolling, everybody's trading, and I'm sitting there with my finger up my nose. I was pissed. I was upset. So I had to get up. I had to walk away, take a break, come back, and then know that I wasn't going to be able to make it all back at one time. Go back to what I use. For example, NVIDIA was kept coming back to an anchored volume weighted average price, and it did it like 6 times today. And each time it did, I traded it and I scraped my way back to even and then to green. And like I was saying, on a small account, that's taxing. Like that's for somebody to sit there and do that every day it's not easy. And you need the bigger numbers because it's easier to trade bigger numbers, and it's takes the pressure off of your day-to-day life. If you're trying to do this for a living and you're doing with 30 grand, like that's not a combination typically for people to be successful.
Right. And you got to have, it sounds like part of what you're saying is you got to have your stress management really dialed in, right? Because like there's a lot of wear and tear in that, and there's kind of no way to get around that. In certain ways, it's just mentally more taxing. So you better be on point and dialed in terms of what you're doing to take care of your headspace, outside of markets when you're not trading.
Yeah, I just try to forget it. When it's done, I like to close the laptop and I just like to forget. I'll come back and I'll look at stuff after dinner just to kind of, refocus my attention for the next morning. But, a lot of people are like, oh, this requires, constant study, et cetera, et cetera. It's once you've learned the things that you need to trade, you kind of have those down, right? Like once you move from, arithmetic to algebra and algebra to calculus, like you don't need to study it more. You just need to apply the formula to the situation.
Pardon the brief interruption, but I just want to remind you that the final live Sang Lucci Master Course ever starts on March 25th. If you're ready to put in the work, we can make you into an unbreakable trader. You can learn more and get access to a bunch of free bonus content over at sanglucci.com/MC. And that link is in the description as well. All right, back to the video.
Right.
Yeah. I think that there's a time and a place for in everybody's trading development that you really need to go deep, and you need to be putting in those hours outside of the markets, as you said, Ronch, to do you understand every component that makes up an option? Like, do you understand, the math behind it that you need to understand, the pricing equations that you feel like you need to understand, those things. You got to go deep into it and kind of obsess. But once you've done that, it sounds like for you, what you're saying is your way of bending and not breaking, or your way of becoming unbreakable, keeping in the theme of the series, is by giving yourself that space, by stepping away, by not grinding yourself into a powder just to say that you can put in more whys. You can put in more works. You can say, look at me, pat on the back. I put in another 4 hours after the market closed, so I can feel good about myself. Like why, right? Why do that? So give yourself the space. Yeah.
Yeah. It's the quality that you put in, not the quantity. Right.
Right. Yeah. Be smart with those hours that you're going to put in and observe. I really appreciate what you're saying. It's like you're doing it with a small account right now. You're very aware of how taxing that is. And so you're taking measures to balance out the impact of that, right? Like you're not just saying, well, I'm going to magically find a way to make it less taxing. Like it's a grind, to build a small account like that. It can be tough.
I haven't done it for a long time. We started it, I don't know what, October?
Yeah.
So, or September, October. So we're just going to carry over and keep it going this year. It's not easy. I empathize with anybody who's trying to do it with a small account size. It's not an easy feat.
Yeah. Yep. Did you feel like at any point last year it felt like things were just getting screwy in markets in a way that they hadn't really before? That it was just like, what the fuck is going on here? You know, that there was a new kind of game being played.
I feel like here was what my observations were. My observations were that at the exact same time that markets started acting in a way that I didn't recognize was at the same time that I was having a lot of personal issues. And I don't mean, I was having a fucking nervous breakdown. I mean, shit in my life was, there were a lot of things that needed attention all at the same time, whether that was, a kid or a spouse or a parent or something, you know what I mean? A car, right? Like a house, something, all of it at one time when everything was kind of at this crescendo of everything was going so well to, okay, now all of a sudden everything is at a place where it needs to pause because everything now suddenly needs attention. That all of that stuff lined up. And to me, I don't think that's that out of the ordinary. And it was less about me trying to understand or figure out what was happening as opposed to, okay, this is happening. Like this is a fucking Fibonacci sequence. And guess what? Everything is piled up right here at the same time. And it's messing with my mojo. So that was my observation. And I was like, okay, like the universe is telling me that I need to just chill the fuck out here and slow it all down and take care of these other things that need to be taken care of, at least as best as I can for now, until we can, you fix the flat so that you can get it to the gas station and put some air in it, and then get it to the tire place and get a new tire put on, right? Like it just doesn't all
so that the wheels don't completely come off the wagon and we go careening over the edge of the cliff. Yeah.
Correct. And it happens. Like that's not I don't think it's uncommon. And sometimes markets change. And then sometimes like things in your life change at the same time. It just happens sometimes.
Yeah. Yeah, for sure. And obviously sometimes things that are changing in the market impact your personal life. And then you get into a little bit of like a feedback loop where it just snowballs on itself. And you're like, what the hell is going on? I mean, do you feel like a younger version of yourself would have just tried to power through that? Would have just been like, no, I got to trade every day. Like I gotta grind this out.
Well, I mean, how far back are we talking? Because I'm pretty fucking old.
You're not that fucking old. I mean, I don't know, 15 years ago, do you feel like you would have just been like, nah, man, I'm a trader. I got to trade. I got to, this is what you do. You got to just power through.
No, I think 15 years ago, I was at that point where I was out of my first marriage and rebuilding. So I wasn't in the mode 15 years ago of, I should say I was in the middle, maybe the last quarter of rebuilding, right? Like I had the couple of years, like call it 20 years ago, I was kind of decimated and rebuilding. So all through that time, it was more about stack. It wasn't about what I power through. So a younger version of myself in today's kind of marketplace, I think that I would probably be similar. When I was much younger, like in my late 20s and early 30s, I certainly would have looked at it and been like, no, fuck it. We're doing this. We're going, right? Like we're throwing down on this. Right. But after living through what I've lived through, it's more about recognizing kind of the biorhythm of yourself as well as, the market. That's not to say that I'm being Miss Cleo about it, but if you just recognize when things are not going your direction, you just got to take your foot off of the gas and just wait, right? Just pause.
Right.
You don't necessarily need to figure it out, but you need to at least be smart enough to say, I got to pause here.
Yeah. Yep. So Lucci and I have talked in the past about once you get to a certain point in developing skill sets and having hours under your belt trading, your mistakes 98% of the time are not coming from misreading something in the markets, right? It's mostly they're emanating from your personal life. They're emanating from something that is fucking up your head, moving things around in a way that is throwing you off your game, and then you're bringing that into the lens that you're using to see things and trade things. Do you find that that's the case for you at this point? Like, would you say that that's kind of where you're at?
Yeah, and as we were talking about earlier, I don't apply that same mentality to the longer term types of positions, like the leap positions. Those don't bother me, right? Like the swing trades, they typically don't bother me because a lot of those I can just set. I'm like, all right, I kind of know what I'm doing. I'm setting price targets on those. I have time frame. So I know I don't have to watch those every second of the day. Whereas with the scalp account and a small account, I kind of got to watch that every single second of the day if I have trades active. And there are going to be times where emotionally, even though I know I'm emotionally not in the right headspace, I'm still clicking the button, right?
Mm-hmm.
For example, this morning, I thought I was in the right place on Tesla for a short. I also knew that it was a spot where it could bounce, right? But then all of a sudden, I'm like, that didn't go the way I wanted it to go. Instead of it going through that area, which it eventually did, but not on my time frame, which it eventually went through, it didn't go. So I was like, I got to back out. So if I back out and I click the sell button on a Tesla, you can be down $400 or $500 with just the click of a mouse, right? And in a smaller account, that forces you to make some decisions like, okay, am I going to continue today? And am I going to continue for the purpose of just trying to make this money back on the P&L? Or am I going to be smart and wait for areas that I know are going to provide me with opportunity for a trade? So, that was the example from today. I was emotionally not in the right spot because of all of the BS that had happened prior to the opening. And, in trading, it's easy to point a finger at something and say, that was fucked up. And, you caused a problem for me. Ultimately, the issue, the problem is the person clicking the mouse, right?
Right.
It doesn't matter what the
responsibility for what you're doing. Yeah,
exactly. Yeah. So, so you can be mad all you want and stomp around, which I do. And then you have to get over it. You have to have a very short memory and then get back in there and see, do you really have an opportunity, or can you recognize if you're emotionally tied to the decision that you made and the outcome that it delivered? I didn't like the outcome that it delivered. I thought that I would have opportunity again today. And I thought that opportunity would be through NVIDIA because it has been treating me so well. So I went back to where I was more emotionally stable, less emotionally fragile. And I waited for areas to take trades on NVIDIA. That's what I did. I scraped back to even and then to green. It wasn't a big day. It was an $80 day, but I pulled myself out of an $1,100 hole in a small account that really doesn't react well to $1,100 holes, right?
Right.
That changes everything.
When you say you went back to an area where you didn't feel sort of emotionally fragile, you mean you moved your focus to NVIDIA instead of out of Tesla?
Correct.
Okay.
Correct.
All right. So you were like, I know NVIDIA. I know this name well. This is, this is kind of safer ground for me. I'm gonna go there and play this out there. Okay.
Yep.
Gotcha.
Yes.
Yep. With regard to this, like, you also just going through this example, you were talking about, having a short-term memory and taking ownership over like your responsibility. At the end of the day, the platform's got issues. There's all sorts of stuff happening external to you, but you're like, it's on me. I'm the one clicking the mouse. Where do you feel like, how did you develop that? Because people want, they want that for themselves. You have a military background, you were a hockey player. Like, did that come from your life experiences and then you brought that into the markets? Is that always the way you were? Or do you feel like you had to really like reinforce that and build that out as you started trading?
It's a really good question. And I don't know if it is one thing in particular. What I can tell you is like growing up playing ice hockey and lacrosse, like both of those games are games of mistakes, right? And what I always noticed as even as a kid and as an adult, you can be mad. It's okay to be mad and pissed off about something.
Mm-hmm.
Once you get it out and vent it, whatever it is, like that was your moment, and that was your for lack of a better word, that was your bank. You just tapped your bank. And if you stay at the bank, you're gonna withdraw all of it. You don't want to withdraw all of it, right?
Right.
So in like in a hockey or lacrosse, you're like, all right, that didn't work. Like whatever it is. Like I was fucking late for a line change, and the other team scored, right?
Mm-hmm. Mm-hmm.
Right. That cost me. It cost the team. But if I sit there and I dwell on it, and I'm like, guys, I'm really sorry. I'm really sorry. I'm really like. That doesn't matter. You'd be like, hey, that's on me. I fucked up. I won't do that again. And you get out there and you start working again, right?
Right.
That's what, and that's what being a teammate is about. And same thing in the military. But, in the military, you're not getting like you're not going to get a lot of second chances. right.
The stakes are just a little bit higher. Yeah.
Right. So it's the same thing. You want to do what your job is, and you don't want to do so much outside of your job, and you don't want to do less than your job, because it's going to impact you and everybody else around you in a negative way. So I don't know that it came from one thing. I think it's just things that happen over time. And for example, this morning, like, I'm still kind of pissed off about it now that the market's closed. I'm like, hey, that really fucked me up. But it wasn't, nobody did that to me. It wasn't directed at me, right? It's how I reacted to the environment. So if I recognize that I'm reacting poorly to the environment, it's okay for me to be cranky about it. But once it's over, and you move on, right? And most people know that, when I'm in the room, if there's something bugging me, I'll cuss and swear about it, and then I'll move on, right? It might last 15 or 20 minutes, but I'll move on.
Right. And then you're done. Yeah, I mean, I think it's one of the reasons why people respond so well to you and to Lucci, and of course Jay too, as traders and as teachers, is that you guys bring this kind of energy. You hold yourselves accountable on this level, and when you are, as a student, immersed in an environment where you're learning from people like you guys, you get infused with that kind of accountability, that energy. You can't go through the master course and come out and still think that you're going to be okay if you're blaming other people for your problems. You just can't. Like that message is ingrained into every single class, every single moment, that you have to take responsibility for what you're doing. So, but that's obviously, that can be a really challenging thing for some people. So, okay. Well, then one of the things that I would want to talk to you about is, just qualities that you feel like it's really important for people to focus on, given the depth of your experience. You got somebody who's coming in, and let's say, they got a $30,000 account, not a $2,000 account where it's really, really, really challenging, and you really have to, pick your spots. But let's say, but it's not huge. It's not portfolio margin. Like, they don't have the ability to kind of let things swing as much as, maybe they'd like. What do you feel like are the most important skill sets that somebody like that, from a psychological perspective, that somebody should be working on, to make sure that they don't hit that breaking point? Like we talked about, so many people hit a breaking point last year. What do you feel like is important for people to focus on?
Do you mean from a small account holder?
Point of view? Someone's like 30 grand. Yeah. Let's say 30 grand.
I think you have to make a decision, first of all, what you can handle mentally, emotionally. So for example, if you have a $30,000, $35,000 account, $25,000 account, and you want to be a day trader, you need a certain set of, in my opinion, you need a certain set of attributes. And one of those is the ability to shake off a bad decision that may have cost you $400 or $500, $1,000, and to evaluate the situation and say, do I have opportunity here again today? And what is my motivation for it? Am I trying to scrape back the $1,000, or am I looking at it from a stable point of view and saying, is there opportunity here? Right? If the two line up, it's okay. If you're trying to get your $1,000 back and you're just desperately clicking, you're in the wrong headspace, right? I guess you can call it revenge trading. You can call it panic trading. You can call it, just get me back to desperate trading. You can call, you know what I mean? Like those emotions are real. Like, oh my God, I lost $1,000 of this account and I need it back, right? Like it can't be gone. I have to have it back. That mindset can find you trouble, because the desperation is going to force you into a mindset of, I have to click the button. I have to try this, right?
Yep.
As opposed to, hey, I made some boneheaded mistakes there. Is there still opportunity left here? And what are the tools that I know how to use to help me manage that emotion? And can I put the emotion off to the side? Has the opportunity arrived? If you can separate that, you have a much better chance of success. And that's from a scalp standpoint. If you've got a smaller account size and you're trading with bigger time horizons, you don't have that same pressure, right? So you give yourself a break. In that scenario, you're looking for, hey, do I have an opportunity on something that's been, that's in a pullback, or do I have an opportunity in something that this is making new highs and it looks like it's going higher, or this looks like it's hit highs, it can't get past here. Do I have an opportunity for a short? And can I do it on a longer time frame? And this particular area, I'm just going to set it as an area that is my physical or mental stop. And if the trade doesn't work from here, I just get myself taken out of the trade, either with a stop order or you go in there and close it yourself based on some other parameters. So it kind of depends, right? On because either method will work if it's applied properly, right? I like the aspect of the day trade, because there's gonna come a time where you find a day that trends. And when you find a day that trends, and you do it in NVIDIA, in Amazon, a Tesla, a JP Morgan, whatever it is, it can even be a small cap, right? Like plenty of guys trade small caps. Well, I don't care what the name is, but you'll find a day. And if you're in there, you'll find a day where you catch a wave and you stay on the wave for the entire day, or a very good majority of it. And then all of a sudden you've got an account that's 30 grand and now it's 60, right?
Right. You have those big banger days that you get a couple of those in a quarter. You only need a couple and you're really in business.
Right. So that's part of the motivation. And when I do the small account reviews on Fridays, you'll see, and what's really great about this program that we've started to use called Trader Sync, is you see that laid out, and then you go, because the trade is there and then you can see it on a chart, you can go back and you can just evaluate, was I in the right mental time? Was I in the right mental spot for the trade right there? Did I have the entry right? Was I using the tools that I say that I used? Did I enter or exit properly? And if you didn't, guess what? You have information right there that allows you to either develop that mental prowess in those situations. Go back and remember what happened in that situation. Can you adjust? Did you learn something from it, so that the next time it happens, you either repeat the same behaviors for the same outcome, or you avoid it because you didn't have a good outcome.
Right. Yeah. And honestly, in part inspired by you and what you're doing with, with the small account challenge, we're going to be adding a component to the master course that we've never had before, which is basically like weekly accountability and support around that. Like we're going to help students when they come in identify what are the most important things that they want to improve on coming out of this course, what are their goals, and what are the hangups that they have in terms of their trading that are the things that they really need to like iron out, the corners that they need to turn. And then on a weekly basis, we're going to do trade reviews with everybody. Students can opt into this. Some people just want to like kind of have their own process and do their own thing. That's fine. We're not going to force anybody into this. But for the people who want to kind of engage at that level, we're going to have a process in place to help everybody go through that. And that's, kudos to you, Ronch, in part because you've been talking about what, your process sort of in public about what you do, how you go back through and look at like, what were the decisions I was making at that point? Was I, what was going through my head? What was happening for me? All right. What can I learn from that? How can I adjust, and how do we change things up going forward?
Amen.
Yeah. And so it sounds like for you, I feel like inherent in what you're saying is that trading a smaller account is just a higher pressure environment, no matter what, right? So you need to really, as somebody who's doing that, somebody who's trading, as we say, a $30,000 account we're calling that a little bit smaller. You need to understand if you are down for that type of pressure. And if not, scalping is something that is also going to increase, intraday trading is going to increase that level of pressure, right? For you, I feel like that's one of the things that you are an incredible model for is identifying like how you want to feel when you engage with markets and how you have positions on. And I feel like your leap positions, your longer term, your swing trades and your longer term positions, you're like, my risk is going to be so dialed in on these things. Like I'm not carrying a bunch of risk overnight because I want to be able to sleep well at night. Like I don't want that in my head. I don't want that to be my life, so I'm going to structure these trades such that I don't have to worry about this kind of stuff. And it feels like that's particularly important if you're trading a smaller account, right?
In my opinion, yes. However, like I was saying earlier, if you are not a scalper and you have a smaller account, you just have to adjust. And what does that mean? Using a longer time frame, right? So maybe your size is smaller, your time frame is longer, and then on a day-to-day basis, I don't know what everybody's day-to-day looks like, right? Some people are looking at that and they're like, well, I've got this 30 grand. I can take a little bit longer of a time horizon because I work a 9 to 5 and I can set alerts and get those alerts on my phone. And during the course of the day, if I get one of those alerts, can I focus my attention for 5 minutes on having to make an adjustment? That's a very different approach. And that's an approach that we take with things like, every week I do on Wednesdays, I give ideas for things like iron condors, right? On Mondays, I give ideas for things like long-term positions using leaps. So I do cover something for everybody from a time frame standpoint. The question is, which one fits you, right? Mm-hmm. A lot of people that come into the steam room like to trade daily. They like to scalp. There's a good handful of people that come in that need that time frame. And if you know that you need that time frame, you have to trade accordingly. So for example, if you've got a $30,000 account, $25,000 account, whatever it is, and you're like, I can't trade every single day, but I've got this position that I like. I want to enter at whatever, $100, right? The stock has been down, and now I've noticed that the technicals are setting up the 50 and the 200 day underneath. There's some insiders buying. I want to participate. I'm going to buy 60 days out of a XYZ contract. 60 days out, I'm going to buy the $100 strike, or I'm going to buy a little bit in the money. I'm going to buy the $90 strike, and I'm going to set an alert. And if this isn't the spot and the stock drops below $100, I'm just going to close that part of the position, and I'll wait and I'll see if it gives me another setup, and then I'll enter again. And then if it starts going my way, I'll set alerts, and the stock goes from 100 to 110, gives me an opportunity to say, okay, I can take profits here and close it down and look for the next trade. Or, hey, I want to stay in this trade. I want to roll from a $100 strike or from a $90 strike to a $100 strike and keep the trade going. Like there's so many different ways to approach it. You just need to understand who you are, what you can handle emotionally, and what does your day-to-day allow you to handle. So it's not like you can't participate with a small account. It's identifying what time frame works for you and how do you apply that time frame to what you're doing so it fits your day-to-day and so that it fits your emotional and mental capacity. And if you learn those things, you can figure out which one to apply. I mean, we have tons of stories of guys in the steam room who have participated over the years in how I set up leap plays. I mean, I'm not exaggerating, we have members that have become millionaires from using that strategy. You know, so it just depends on who you are and do you have the capacity to learn it and apply it and stick with it? You can't just go from being, oh, I'm a long-term trader to, oh, now I'm going to scalp, right?
In a day. That's overnight. That doesn't work like that.
It doesn't fly, right? It doesn't work, doesn't translate. Yeah. And you're going to wind up being, the emotions that come with that, if you're not ready for it, it's like being at a freaking Barry Manilow concert in the 70s to jumping into the mosh pit with the circle jerks. Like, good luck to you. Right?
Who are the circle jerks?
Well, that's why I'm giving you colorful language. Look them up, right? Look up Barry Manilow, look up the circle jerks.
Everybody just Googled the circle jerks and they're like, oh shit, I don't want to be in that fucking mosh pit. Really well said, loud and clear. I think that's one of the central messages that we hit people with over and over and over, and for good reason. It's just like, you gotta find the way that works for you, for your temperament, for your risk appetite, for the way that your day works. I mean, you, Ronch, you're trading all day. If you want to be in front of the screens for 8 hours a day, you can do that. You can do that. We have people who, they either have side hustles, they have full-time jobs, whatever. They have other commitments. Like, don't try and scalp an option when you're about to go into a meeting with your boss.
That's bad.
That's a recipe for bringing yourself to your breaking point.
We have a member who was long 2,500 contracts on JP Morgan. He was holding the puts. And he's like, I'm sorry, guys, I'm not in the stream. I'm driving the kids to school. I'm like, no. You have 2,500 contracts open, right?
Yeah.
It's like the kids can walk. Like 20.
Yeah, and he's got to keep his eyes on the markets.
You don't turn your back on a 2,500 contract position unless it's something that has a ton of time and you're expecting a different kind of a move. But to put 2,500 contracts on with a couple of weeks, whew.
Yeah.
Yikes.
But to each their own. I mean, we obviously, everyone who's watching this. Yeah. And we're going to, I'm going to have a conversation, an interview with at least one with Lucci, maybe multiple. And it's going to be really fascinating, I think, for everybody who's watching this to see the difference in risk appetite and approaches that are represented by all the different educators that we have. You have Chris, you have Ronch, you have Wall Street Jesus, you have Lucci. These guys are all operating at a very, very high level and utilize some of the same skill sets, but their risk appetite, their temperaments, the way that they want to feel in markets, is different. I mean, Ronch, I get the sense that for you on an ongoing basis, a good day, you kind of want just equilibrium, steady chip away at things, right? Not like, you're not looking for like surges of emotion and, wow, I feel, dopamine coursing through my veins.
I like to. So, for example, in this smaller account, we started the year, and I'll go over this in my small account review. You guys will be able to go back and see it. I had a trade set up on Amazon, and it was like, hey, because Lucci and I share a lot of similar qualities, but I channel Lucci on and off like a switch, whereas Lucci is Lucci speed all of the time, if that makes sense, right?
Right.
He's always looking for, hey, today's the day I'm going to catch something in the pocket, right? Whereas I'm more skeptical and I'm like, I want to catch something in the pocket. I think I've got something in the pocket. And when I feel like I'm there, I'll jump into the same stream of emotion and consciousness and tape that Lucci is on. And when the two of us are aligned like that, everybody makes a lot of fucking money, right? So, but it doesn't align and happen every single day. It's about, for me, especially in the smaller account, it's about, okay, am I in the right spot? Am I in the right spot? Is the P&L in the right spot? Can I get size in this scenario? And it's a constant back and forth.
Maybe I'll make this the last question for you, but I think a lot of what you're talking about is being patient, right? And finding waiting for your environment and waiting for a time when you are sort of in alignment with your environment, and I think a lot of high performers in any field, trading, whatever, talk about really focusing on your process, staying true to your process and not worrying so much about the outcome, not worrying about winning or losing every day, but just staying true to your process and making sure you're getting better and you're improving what you're doing on a day-to-day basis. Do you struggle at all with, those periods where like you're not seeing your account building every single day in any kind of major way? Let me rephrase that. In those periods where, you're not like really stacking cash all the time, how do you make sure that you're kind of doing the right things? Is that just a sense that you have about yourself? You're like, you know what? I'm following the right process. I'm looking at the right levels. It's just a matter of time and patience for me? Or like, how do you kind of make sure that you're on the right track when the account value isn't necessarily showing that?
I think it's, again, remember when I say there's like a lot of back and forth, like the account, once we had it to 50 and then just, got punched in the face, I just had to stop and say, okay, I need to proactively build back to a number that's going to allow me to take those shots again. And if it doesn't get there, I just can't take the shot. Right. Yeah. So it's no more than just being disciplined about knowing where the comfort level comes from. So for example, if I'm less than $25,000, I'm a pattern day trader. They're going to make me bring the balance back to 25 grand or higher before I get to trade again. Right. Or I've got to go to a cash account. So I don't want to wear the account down going, fuck it, shot after shot after shot. I want to be in a spot where I know that I'm going to be in a better position capital wise to take that shot, right? So they have to line up. So if they're not lined up, I have to do those small incremental steps that I know I can do and just sit there and drip 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 stack 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 stack. Like the account's at 31.5 right now, right? Like, it started the day at 31.5. I ground it down $1,000 and I brought it back to 31.5. To me, that's like, okay, reset, forget the day. Tomorrow, are we going to get a wave? Maybe we'll get a wave tomorrow. If we get a wave tomorrow, I want to ride it, right?
Yep.
But if I'm at like 28K, like the other day, when I was at 31.5 and just puked up $2,000, right? I'm like, I got to get back to that 31.5 before I can consider paddling into another wave and seeing if I can catch it. So
taking a bigger swing.
Exactly. Yeah. It's you've got to be comfortable with those things happening and waiting for the right opportunities to get in. And with the smaller account, a lot of times, you're not going to just magically walk into, and it's very difficult when you're in something that's green and going well. It can be very difficult to look at it and see a position that's up $2,500, $3,000 or whatever, and not start to feel sweat about, I need to bank that profit. It can be difficult to sit there and ride something for $10,000 or for $15,000 or $25,000. But I've done it before. I know what it looks like. I know what it feels like. So when it shows up, we'll be there, right? Like I went from 20 to 50 on this account, ground it down. Now we're building back up to spots where it's okay for me to paddle into the wave. So I've just got to wait for the right wave. I have no doubt that I'll get there. And again, when we look at the stats, like the win percentage of the trades it's a huge win percentage, but the question is, do you take the right size at the right moment? And when you get it wrong, guess what? You can't paddle out into the lineup with the big boy surfers and catch the big wave without the right freaking board and the ability to paddle in, right? They're going to be like, get out of here with your fucking soft top, idiot. Like that board doesn't belong out here, right? And if we see you out here again, we're going to slash your tires and fuck your board up. Like, don't do it. Get out of here. So you got to recognize that.
It's funny how when you're in Hawaii, when we do these interviews, all of a sudden everything's a surfing metaphor. It's funny how that works like that, right?
Wave, right? It's golf and tennis too. I can use tennis and golf all day too.
Dude, it works. It works. I mean, the surfing metaphors really, really work. I think they apply. So yeah, I mean, we could talk about this stuff all day, and obviously we haven't gotten so much into the tactical side of things. Like a lot of people are probably sitting here watching and being like, okay, how do I know when to get big size, how big the size should be, when my environment is right, okay, tactically, how do I execute all this? And the reason why we're not getting into it now is because it would take a lot of classes. It would take a huge course. In fact, it would take 24 classes. It does take an entire course, which is what we teach. So that's what the master course is there for, y'all. Ronch, appreciate you doing this, talking through all this stuff with me, and kind of going into the psychological side of things, a good bit with me. So yeah, I think that's a good place to stop it. But we'll see you in the master course, and of course see you on the live stream, in the steam room.
Cool.
Appreciate it.
Yeah, man.